Are you finding it really difficult to learn double entry bookkeeping? Well, you've definitely come to the right place, because I'm going to show you some really cool techniques to make this so much easier. Hi, I'm Steve from YOUvolution Learning, and if this is your first time here and you're studying AAT, why don't you hit subscribe and tick that notification button so you don't miss out on any of these useful tutorial videos. So, you've all probably seen or heard of CLIC, one of the most common ways in which students try and learn how to do double entry bookkeeping. It's an acronym, as you can see from the screen. It's an acronym that says CLIC, and what it does, it says that you debit expenses, assets and drawings, and you credit liabilities, income and capital. So it's a good way of making sure that you know how to post to each of the accounts using those account types. But is it really on its own that effective? And I think there's probably things that are missing really from you just using CLIC. So during this video, I'm going to show you some of the ways in which I've helped students to utilise CLIC, but adding some extra things in as well to make learning those accounts really, really easy, especially posting to them as well. Now, pretty straightforward. It shows us that we debit each of these account types and we credit each of these account types. Now, on its own, just like that, I feel that's pretty useless really. And when you try and find and use CLIC, you might find that your training provider or others, they have given you these extra bits here. And these are the bits that make CLIC really, really useful. So what they're saying is, if you get an expense account, it's saying that an increase in that account type is a debit. And if you're going to decrease that account type, it's going to be a credit. So likewise as well when you come to do the opposite side. So if you've got a liability account, for example, you can see that liabilities is a credit, and we know that an increase in that account type in a liability is a credit, and a decrease in that account type, the liability, is a debit. So let's try and utilize this. I'm gonna focus on this part here, is the account types, because that's the bit that's really going to make the difference between us just looking at CLIC, but actually trying to utilize and do the double entry properly. So let's take a look at a typical level 2 type question. So you may find this in your first exam bookkeeping transactions, where you are required to do a mini trial balance or create a trial balance, where you've got a list of accounts down one side, and then you either have to put the values into the debits and credits, or you need to tick whether it's going to be a debit or credit. Now, as you can see from the screen, we've got a mini trial balance here, and we've also got a reminder of what CLIC is. So when we look at this one, we go, right, okay, sales. Let's go to CLIC. Well, I can't see sales in there. Let's have a look at motor vehicles. And again, I can't see motor vehicles within CLIC. So what's missing? It's that connection between the account name and the account type. And that's the bit that is missing from having CLIC. And I think that's where students then find it difficult using something like CLIC to try and help them with their double entry transactions. So one of the things I do to help students is I do this instead. Let's just add a column in for account type. Now, if you've got a trial balance, you can either write the account type next to the name, you can add an extra column if you want, you can put it wherever you'd like so it fits. Now, if you're doing it in Excel, obviously you can just add a column in. So I'm going to show you now how we're going to take the account name and we're going to find out which account type it is, therefore helping us understand whether that account name is going to be a debit or a credit. So let's take sales for example. Sales is something that the business is selling on a regular basis. So this is our regular money that's coming in. Regular money that's coming into the business we call income. We know that sales is where the regular money is coming from, and the term we use for that is income. So now we understand that sales is income. So income, as we can see here, is a credit account. So therefore we just put income, and then we know that it's a credit account. So let's take a look at purchases. Now purchases is something that the business is purchasing, buying on a regular basis. They're buying something to be able to sell it to their customers. So those purchases, because it's something that we're buying on a regular basis, we treat those as what's known as an expense. So we say the account type is an expense. We can then look at dead click, and we know that expenses are debits. So we can tick debit. Now motor vehicles. Now motor vehicles, these are something that the business owns in order to be able to maybe deliver stock to their customers, or for their sales reps to be able to drive out and see clients and customers as well. Now the business may have purchased those to be able to use in the business. Now because we've purchased those, that's something that we own. Anything that a business owns is known as an asset. So we say motor vehicles, we own those, so that makes it an asset. And again, if we look at dead click, we can see that an asset is a debit account. So again, we just tick debit. Now discounts allowed. It's a bit tricky one, this one. Discounts allowed is something that we're allowing our customers to take from us if they pay us earlier than their normal credit terms. So because we're allowing them to reduce the amount that they pay us, in effect, that's like an expense. It's costing the business money, and it's something that happens on a regular basis. So we can treat discounts allowed just like an expense. Something that is costing the business money on a regular basis. So again, as we saw earlier, an expense is a debit account, so we can tick debit. So let's take a look at the sales ledger control account. Now the sales ledger control account is where we keep all of our customers' invoices that have yet to be paid. Now because they haven't yet been paid, they are going to be paid at a future date. Anything that we're going to receive a benefit from in the future is known as an asset. It's something that we're going to get in the future. So because sales ledger control account is an asset, again like before, we can see that assets are a debit. So we just tick debit. Office equipment like motor vehicles, again, is something that the business is buying to be able to utilise in the business. So this could be your computers, your laptops, your printers, things like that. Anything that the business buys to be able to use in the business is also known as an asset. So office equipment, we could again say it's an asset. And as we saw from the previous one, we know that an asset is a debit. So let's take a look at the purchase ledger control account. Now the purchase ledger control account, this is the account where we record all of the outstanding invoices that we owe to our suppliers. Now because we still owe that to our suppliers, anything that a business owes to somebody else is known as a liability. So a purchase ledger control account is a liability. And then when we look at dead click, we can see that anything that's a liability is a credit. So we come back to our trial balance and we can tick credit. So hopefully you start to see there the missing link between being able to look at account names and dead click is those account types. And those are the areas where when you're learning double entry bookkeeping, learning the account types alongside the account names bridges that gap between the account name and using something like dead click. So one of the things I advise students to, if you are doing your T accounts, for example, if we've got sales, one of the things I would advise students to do is just right next to there and just say that is an income account. Because I know it's an income account, I know that it's a credit account. So anything that is an increase will go on the credit side. Anything that is a decrease will go on the debit side. Okay, so let's take another look at another typical level 2 type question. So this one is where you've got to enter a business's new transactions when a business has just started. So the question here says, a business has just started, enter the below transaction into the general ledger. We've got office equipment has been purchased for £4,500. The business debit card has been used to make this transaction. Ignore VAT, just to try and make things a bit simpler. So when we look at a transaction like this, another area where students may struggle is understanding which account names to use. Now, especially at level 2, they generally make this quite straightforward. They will give you the account names within the question. So in this one, for example, what have we just purchased? We've just purchased some office equipment. And as we saw from the previous example, office equipment is one of those account names. So it tells us here that we've purchased some office equipment. So our first account name would be office equipment. Now from the rest of the question, it tells us that the business debit card is what's been used. Now the business debit card is what's connected to the business bank account. So therefore, because it's connected to the business bank account, bank is another account name. So that's what our other account name would be. So now we know what the account names are, we do what we did before. We need to think about how do we make the connection between the account name and then CLIC. So again, let's add in the account type into here. So we know the account names are office equipment and bank. So again, let's take a look then. So how do we know what the account types are? So like we saw before, office equipment is something that the business is buying to be able to use within the business. So because they're buying it to be used within the business, it's going to be in the business for a long period of time, we're going to treat that as an asset. So it's an account type asset. And we know from dead click, an asset is a debit account. But before we jump straight into say, we're going to debit £4,500, let's make sure we should be debiting the office equipment account by using the information that we have here. So because it's new office equipment that we're purchasing, that means we're going to be increasing the account type, which is a debit. So we know because it's new office equipment, it's an asset. When we increase an asset, it's going to be a debit. So we debit £4,500. So let's take a look at the bank. And again, before we jump straight into going, well, if I debited, then I must credit, let's make sure we get that correct. So again, let's take a look at what a bank is. So let's take a look what bank is. So with a bank account, we normally expect the business to have money in the bank. So because we expect the business to normally have money in the bank, anything that the business has in the bank account should be treated as their own. That makes it an asset because they own that money. They can use that money for purposes within the business. So the account type is an asset. But again, let's check. How should it be treated? Well, we had money in the bank, but we just used that money to pay for some new office equipment. So really what's happening here is we are decreasing the account type, which this time is a credit. So we credit £4,500. Okay, so again with this one we can see, we can jump straight in and say, well, if we're debited here, we must be credited to somewhere else. But what we're really trying to do here is make sure we understand each transaction and why is each transaction a debit or a credit in the accounts that we've looked at. So again, we've taken the account name, we've made sure we get the account type correct, and then when we understand the account type, we're thinking about how that transaction is affecting that account type, so therefore is it a debit or credit. So I've looked at some level 2 type questions, but I don't want to leave you level 3 students out as well. So let's take a look at a typical level 3 type question, looking at journals. So you can see here we've got office stationery of £280 being purchased using the business debit card. This transaction was correctly posted to the business bank account in the general ledger. However, the opposite side was posted to office equipment in error. Let's make the relevant corrections. So again, with this one, we've got to think of type, which account names are we going to be using? So it tells us we've got 3 different account names in here that are potentially being used. We've got the office stationery, we've got the business bank account, and we've got the office equipment account as well. But before we jump in and do the corrections, we need to make sure we understand where those incorrect entries were posted to. So the 2 accounts involved in the incorrect posting, but not both of these were incorrect. Remember, it tells us that the bank account was correct. We've got the bank, and we've got, it tells us we posted it incorrectly to the office equipment account. Okay, so again, how do we know which side those transactions have gone to? So it tells us that we have correctly posted, to the bank account. But again, if you just purchase something, as we saw before, how is the bank account affected? So we know that the bank is an asset, as we saw before. But this time, because it's an asset, we've just used some money to be able to purchase something, so therefore we've decreased the bank, so therefore it's a credit. So we go £280 on the credit side. So where would that have gone in the office equipment account then? Because we've credited the business bank account, therefore we would have debited the office equipment account. Okay, now this one, the bank account, as it says there, was correct. It's the office equipment account, so we know that that's one of the accounts where we need to put the correction. So we've got office equipment. So what did we actually buy? Well, in the question it tells us we actually bought office stationery, so therefore that is the other account name, office stationery. So again, now we know what the account names are, we need to think about the account types and therefore about the corrections. So again, I've added in the account type into there. So we already know what the account names are, office stationery and office equipment. So office stationery, again, this is something that the business will be buying on a regular basis. So stuff like your pens, your pads, your calculators, things like that, stuff that the business needs on a regular basis. So because we're using it on a regular basis, it becomes an expense, a regular purchase. So the account type is an expense. So we know that expenses are a debit account. And because we're purchasing new office stationery, so therefore we're going to be increasing the expenses, which is a debit. So we say £280 on the debit side. Now office equipment then, what are we actually doing with office equipment? So if I just redraw the account here, we've got office equipment. And we originally posted it onto the debit side. Now what we're doing really is we're taking it out of the office equipment account so we can put it correctly into the office expenses account, the office stationery account. So what are we doing with the office equipment account? Well, we're going to be decreasing that account. Okay, so which account type is it? So we've already seen that office equipment is something that the business owns, using it within the business. So therefore, it's an asset. Okay, so as we've seen, an asset is normally a debit account, which is what we've seen up here. But this time, we're going to decrease the asset, the account type asset. So therefore, it is a credit. And as we would expect, we would take that out of the office equipment account to clear that out. So hopefully you've started to see there that the gap between learning double entry bookkeeping and using something like CLIC is understanding the account name, therefore the account type. That is the part that's really, really important, that you look at those account names and that you understand what the account types are. Once you get that, you can then start to utilize something like CLIC. So what should you be doing next? Well, the key to learning anything at all is practice, practice, practice. I won't be the first person to say this, and I most certainly won't be the last. Practicing something like this is what's going to make it really easy. What we want you to be doing is getting to a point where you think, oh, sales is an income, therefore it's a credit account. If I'm increasing sales, it's credit. If I'm decreasing sales, therefore it is a debit. That's where we want you to get to. And ideally, you want to be doing that in your first couple of exams at level 2. Ideally, the first exam. So then when you get to level 3 and you start to do some more of those difficult journal type questions, you don't feel like you've still got to learn double entry bookkeeping as well. You're already in that position where you understand the account name, what the account type is, therefore how is that account being affected, so therefore using something like CLIC effectively. So as always, I want you to go away with something that you can actually use. So in the description below, I've put a link to a spreadsheet that I want you to have a go at using, and use this on a regular basis. I'm just going to show you here. So the spreadsheet looks a bit like this. And as you'll see, something similar in there. I've got the account types in there, showing whether it's going to be a debit or credit account, and then saying, well, an increase in that account would be what, and a decrease in that account would be what. Now, if you're doing level 3, I've also added these extra 2 columns in at the end as well to say, well, to close off the account, what are you actually doing? And therefore, using how you close off the account to help you to understand whether that's going to be a profit and loss account or a statement of financial position account. So let's take a look at using this spreadsheet then. So we've got purchases. As we saw earlier on, purchases are something that we are purchasing on a regular basis to use in the business. Anything that we purchase on a regular basis is going to be an expense. An expense account, as we see from CLIC, is a debit account. And utilising that additional information at the bottom of CLIC, when we understand how we affect that account in terms of increase and decrease, we know that when we have a debit account, when we increase a debit account, that's going to be a debit, and when we decrease a debit account, that's going to be a credit. Now, for those students who are studying level 3, let's have a look how we close off an expense account. Now, expenses are the accounts that appear in our profit and loss, so we know which statement it goes to. So when we close off an expense account, we close it off by doing a transfer to the profit and loss. And as it says there, because we're transferring to the profit and loss and we know it's an expense, therefore it's going to appear in the statement of profit and loss, the SPL. So let's take a look at the purchase ledger. As we saw earlier on, the purchase ledger tells us how much we still owe to our suppliers. So because we owe money to our suppliers, anything the business owes is treated as a liability. And we know from CLIC that a liability is a credit account. So when we increase a credit account, that's going to be a credit. And then when we decrease a credit account, we know that's going to be a debit. Now, a liability appears on the statement of financial position. Whenever we close off an account that appears on the statement of financial position, we close it off by doing balance carried down. And as we just established, if it's a liability and we're closing off by doing balance carried down, it's going to appear in our statement of financial position. So hopefully you've seen then, in order for us to be able to make the most of something like CLIC, there's a little bit of additional work that needs to happen, and that's helping us to understand how to use CLIC properly. So if we take our account names, we can then start to look at those account types. Once we understand those account types, we can then start to use something like CLIC and make it more effective. What we really want to do is get you to the point where you think to yourself, sales account is an income account, that makes it a credit account, so therefore if I'm increasing a credit account, it's going to be a credit. If I'm going to decrease a credit account, it's going to be a debit. Learning those account types alongside CLIC, that's what is going to help you to get to that stage so much faster. Okay, so if you found this video to be useful, don't forget to let me know in the comments below. I really like to know that this is helping you. And if you've liked it as well and you found it useful for yourself, why don't you share this with other people so that they can benefit from using this technique that was shown you in the video today. Don't forget to like the video and subscribe as well, hitting that notification so when I do any more of these type of videos, you'll be first to know about it. Until next time, thanks.